Hello, investors and traders, and welcome to the weekly market report. I'm AJ Monte, and this is a one-year daily candle chart of the S&P 500 ETF, ticker symbol SPY. As I zoom in here, you'll see that I drew my lines with the forecast down to 436.46 last week. If you recall from last week's report, I also said that that would be a 2-week forecast. And while it looks like it's going far against that forecast, let me just say this. We hit a resistance area right here to the penny, and look at the volume drop up until yesterday. Now let me zoom in a little bit more so you can see what this means. A volume drop on the way up tells us the buyers are getting tired. When you see a doji like this with a small little sliver of red in the body with an increase in volume, that tells us the sellers are getting motivated. So while we blew through this resistance here, notice as I erased that resistance line, we gapped up and again hit that resistance upside to the penny. My downside target still in place. I'm not moving that one single bit, 436.46. And when I get to the VIX next, I'll show you why this is looking more bearish than you may even see on this particular chart. So following through on the rest of the forecast, you see this wide divergence from the moving average. You see the CCI and the stochastics are starting to roll over right here. The stochastics is hinging lower. CCI is just a hair over a sell signal. Once it crosses below the plus 100 line, which is that red line, it then generates a sell signal. So a lot of the technical traders will be laying into that one or taking profits at the very least. And so, again, nothing changes from last week's forecast. I'm leaving that one right as it is. Now, let's talk about the VIX. This is very important. The VIX has had a very long stretch of red. Today, believe it or not, that is a small little body, let me expand that, of green. Right? So we see a little bit of green at the end of that red tunnel. That is a stale red light followed by a bullish harami. Harami, translated to English from Japanese, is pregnant. It's a pregnant candle. That's the baby candle. Here's the mama bear candle. So again, I'm keeping that target in place for the VIX, but there's some other things that I want you to take note of. Notice back here, the VIX gap down. Here again, the VIX gap down. Here, the VIX gap down. It's a slight gap, but a gap down. I said in the past, I'll say it again, 100% of the VIX gaps have filled, up and down. This is the first time in the history of the VIX where we've had 3 successive gaps to the downside that are still left open. So, for those of you who are long the VIX calls, hang in there. For those of you who are long puts or bearish on the SPY, hang in there. We have an opportunity that has never happened before. This is unprecedented. 3 gaps to the downside and they're still open. So I'm telling you, these gaps will fill. My upside price target on the VIX right there is the end of the line target is 2091. And as you can see down below, the CCI has crossed with a buy signal and the stochastics is just a hair away from crossing with a buy signal. In addition to that, you can see that the VIX is on that key support level back here from September 2nd. So I'm very bullish on the VIX, which means that we are backing up with confirmation here on the bearishness of the S&P. Now let's move right to the diamonds. Again, this was a 2-week forecast for those of you that are keeping score, and I know there's a lot of critics out there, but we are not done with that forecast. Yes, we broke out over that resistance high, but we did so on light volume. Again, look at the drop in volume here as the price starts going up. There's gaps below the market on the diamonds as well here and here that are still left open or unfilled. And if you look down below, you can see that the CCI is about to cross with a sell signal. Stochastic, same story as the other markets. We are just about to cross with a sell signal. So my downside target is still in place for the diamonds, which is 345.35. We have a lot of action next week. Stay tuned. And of course, anything could happen over the weekend with all that's going on in the world. So again, keep your stops in place And if you're thinking about adding to any short positions, stay tuned to my reports. And also for the members out there, you know that IWM, which I'm going to talk about next right now, you know where I stand on that. Our members are making money. We had a great call on Wednesday where we did a lot of forecasting. We hit the majority of the targets on those forecasts from the previous week. And so IWM, there's my forecast. I'm keeping that in place as well with the downside price target of 222.69. This is very close to a hanging man, and this is also a bearish harami. That's the number one bearish candle tied with a bearish engulfing, combined with the number two bearish candle, which is a hanging man tied with a shooting star, and the shooting stars show up with long shadows above them. So again, nothing to add here on IWM except the fact that we have a sell signal on the CCI, and we also have a hinge right there on the stochastics. Now again, for our members, we had a great week this week, but notice a close below 210 is when we get out of all of our positive deltas on our spreads, and we're going full speed ahead into negative delta territory, which means adding to puts. We'll do some butterflies on the way down to make more money and capture some target prices below the market, and everything looks really good there. Just to interject here, for those of you that do follow along with my weekly market reports, know that every Wednesday I go through a rapid fire stock analysis where I go through 30 stocks in 60 minutes. Two of the big ones that came up, I want to show you this. Facebook came up, and notice last week my target was right there at the end of the line for Facebook at 339.99. We hit that target, went a little bit higher, and look at that. Facebook gap down. Same thing with Amazon. Look at the targets I have for Amazon from last week. Again, we don't just do this just with the major market indices. We do this with individual stocks, and we have scorekeepers within our membership that keep track of those. So we have really good numbers as far as the percentage of accuracy. Look at that. This past Wednesday, I put that target of 33.26.27 on Amazon. We are a hair away from that in just 2 days. This is the power of technical analysis. So if you learn how to read the charts and you have stock positions, you can calculate where your risk points are and manage risk accordingly. You could also establish price targets. Like I've said before, I don't ever claim to be 100% right, but I am right the majority of the time. You have to prepare for the times that you're wrong. And when the trade goes wrong, don't mess around with it and try to make it better. You close out of it and you move on to the next trade. It's really that simple. Now let's take a look at the Qs. Tech sector was mixed with a lot of different tech stocks getting hit. Some were rallying, like Netflix rallied in the FANG stocks. But look what's happening here. I'm keeping my targets on the Qs as well. I'm not moving that out. I'm not going to slide that. I'm just putting it down to the gap fill point. Again, reiterating 359.81 for the downside on the Qs. Yesterday, we had a big green candle that showed up, believe it or not, as a bullish engulfing candle. And what happened today? That was completely wiped out by this bearish harami. The bullish engulfing and bullish haramis are of equal strength on the upside. Bearish engulfing and bearish haramis are of equal strength to the downside. So I'm keeping that target in place as well. So stay tuned. Now, Ethereum, what happened there? Well, if you look at the crypto market, ticker symbol ETHE, we had a lot of action here this week. The forecast was lower. It did not go lower, obviously, but I'm still keeping that target in place as well for Ethereum at 31.34. While the gap fill percentages are not the same in equities, there still is a gap here and a gap down here. There's actually 3 successive gaps in a row on the upside. I'm not going to hold to that 80-20 rule on there, but I will tell you that one of the reasons I'm holding this downside target is because this is a classic textbook hanging man, right? So we had prices going up on strong volume, and then guess what? Yesterday, that red candle showed a small or a slight notch lower on the volume, with today's volume being about 15% less than yesterday's, with the oscillators crossing lower. So there's the report on the spiders, the VIX, the diamonds, IWM, the Qs, Ethereum, and we threw a couple in there, Facebook and Amazon. So stay tuned. I'll put some links to our rapid fire session on Wednesday if you're interested, and then you could join in and keep score with us. I want to thank each and every one of you for the comments and the likes. It really helps us go a long way. And with that, have a great weekend, and I'm looking forward to speaking with you next week. So long.